Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market. So a big gap up open day, and we're finally seeing follow through on an all-time high. And perhaps it's some shorts piling in, thinking that we are going to see a lack of follow through, similar to the last time. And maybe those shorts having to cover is adding to this little rally. But it ended up with a bull flag into two gap up opens in a row. Solid follow through. That being said, we're starting to see a little bit of greed in the market. The thumbnail for the video over the weekend was talking about market euphoria. And of course, we don't want to be buying when there's market euphoria. We want to be ideally selling positions from previously established positions or just protecting. So the daily RSI, look at the RSI and what it does up at these levels, historically speaking. Since the dump in December, how does the daily RSI respond to 70? Can it go over it? Yes. Here we go to 71. Here we go to 71 again, reject from 70, highest we got 73, 73, and keeping in mind that these were not at all-time highs until we got here, and then again, rejection, 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 70, 70, 70, and here we stand at 69. Can we go higher? Yes, we can go a few points higher, and historically, that is a pullback range. So now is the time to be entering hedge positions, scouting bearish positions, but the last thing we want to be doing is being stubborn bears, fighting a blue sky breakout, fighting all trends on all time frames, and just giving away money. We want to be positioning ourselves to potentially benefit from a pullback with very small risk, whether it's break-even stop losses as soon as the position starts going our way, or something along those lines. I personally like exiting half of a position into profit to allow me to place the second position at a break-even stop loss above resistance. So I would love to see a gap up open tomorrow because it would be a third gap up open, and that's a bearish reversal pattern just showing bullish exhaustion, and that would give us that daily RSI right at that 70 level. Today we saw a very, very tight range. I'm very surprised with the amount of volume we saw today, which it was right around average, but the range today was 75 cents for the vast majority of the trading day, and you can go back and find me a day where we see a range of 75 cents, and you're not going to find one easily. That also considering the fact that 75 cents at the all-time high is a much smaller percentage than 75-cent range, perhaps down in the upper 200s. So we saw consolidation today. The hourly time frame had a little sideways move, bear break at the end of the day, but bulls bought the dip yet again. We see on the 15-minute time frame, there's our new low of the day after just a tightening range, and there's our dip buying saved by the bulls. So what I want to see is just a little bit more of a climax of euphoria. I am watching for a bull miners entry. We'll get to that in a second. I'm watching for the potential of a volatility index entry, and we'll get to that in a second. But we have to remember, even if we pull back on the daily time frame, even if these sectors break their lows of today, we're just looking for a daily higher low. And anything above 301.73 is a daily higher low. We can pull back essentially 1.8% or so and remain in a daily uptrend. Even if we lose the daily uptrend, we're going to be looking for a weekly higher low. Right now, the S&P 500 bulls can pull back 6-7% and still be in a weekly uptrend. We could drop 5% tomorrow and be in a weekly uptrend. So just keep that longer term perspective in our minds. And also remember the fact that we have to see bear volume if we're going to see any significant downside movement. It's not hard to go back and look historically and say any big pullback that we saw was on higher than average volume. So if we see a pullback and it's not on very high bear volume, we should anticipate higher lows will be the result of that. If it's very high bear volume, then that goes out the window and we can definitely see follow through. But volume will be the key. And if we don't have bear volume, then the bears are not proving anything to us. So it's fine to be looking for a pullback. Just keep the trends and the longer term perspective in mind. Looking at IWM, we broke resistance today. 158.92 was that level. We got up over 159. This was the only sector here, or the only market I should say, that had not broken the weekly lower highs yet. And XBI is the sector that has not done it. We'll look at that in just a second. But we broke both resistance levels. So weekly resistance has broken, and 161.11 is the highest price that IWM has seen in roughly a year. And we are coming up on that level. Again, the amount of space that the bulls have to work with for weekly consolidation, if we lose the daily uptrend, is a lot. And the daily higher low is 154.24, also a lot of space for a daily higher low to form. QQQ. Bearish reversal doji. I want to see what the hourly is doing. Have we lost the hourly uptrend? The answer is no. So if we don't lose that hourly uptrend, bears aren't going anywhere. High of the day, low of the day, lower high, higher low into the close. If it breaks bearish tomorrow, we zoom out, we see, can the bulls hold 195.29? What does the bear volume look like? If we hold 195.29, the daily uptrend remains intact. If we lose it, we zoom out and we look for a weekly higher low to form. XLF, gap up, second in a row. XLF has been on absolute fire over the last few weeks. Up now, 29.37. So we are looking at prices on XLF that has not been seen since 1 year and 6 months or so, a little bit more than that. Next resistance level will be up in the 2970s, 2977. Daily higher low, anything above 2847. And again, tons of weekly space for consolidation to take place. XLV has already started its daily consolidation. Close at the low of the day Friday, higher open, break of that low of the day today, and another close at the low of the day. So bears have a bit of momentum. And again, we could look at this candlestick and say, it's red volume. That's high red volume. Look at the candlestick. That was a push to higher highs and then bear volume. So we know it's a little climax of both bull and bear volume. And we can zoom in and look at the details of that on Friday and say, okay, a decent bit of that was bull volume. Yes, there's a lot of bear volume. There was some after hours shares settling. But the most important factor is we did not see follow through with that high bear volume today. And again, we saw both start first thing this morning. There are some end of the day bear volumes to be paying attention to. But again, anything above 91.48 is a higher low on the daily time frame. And from where we stand after 2 days of profit taking already, we have 3% of space where we can maintain the daily uptrend. The weekly chart, how much space do we have where we can maintain the weekly higher low? Over 7%. Can the market pull back 7% in a week or two? Yes, it's possible with massive bear volume. I hope I'm driving home the volume point in today's video. XBI gap up open, profit taking. Highlighted on our live stream here is one of the plays to be watching for profit taking. Why? Because the hourly chart did not consolidate Friday for a higher low, while QQQ did. So let's just look and compare. SPY did, QQQ did. Here's our hourly higher low in the middle of the day on Friday, cooling things off. Then we got the continuation. XBI did not have that. So knowing that we didn't consolidate on the hourly and a gap up open is coming, we know it's more extended in the short term than those other names are. So we ended up pulling back significantly. Hourly lower high, we saw this bounce and saw that it was likely just a bear flag. And if we break that support of 83.05 tomorrow, hourly bear flag is confirmed and daily consolidation will be underway. We don't have as much space to work with for the daily higher low, just under 3%. Still a decent amount of space. You could draw an uptrend line if that's your thing to help you visually keep an eye on things in this current uptrend. We know weekly consolidation is coming. We know after 4 or 5 solid green weeks that it wouldn't be surprising for weekly consolidation. So again, just prepare a game plan for what criteria would cause you to enter bearish positions. Keeping in mind that stop losses when fighting the trends and blue sky breakouts of the markets is essential. So the VIX, why am I interested in the VIX? 4-hour falling wedge. We've seen in the past how on the daily time frame falling wedges have seen some very nice follow through. So I just saw the lower lows not getting a ton of bear follow through and it caught my eye to start paying attention. That, of course, in conjunction with the clear market euphoria that we're seeing right now. And this is the pattern that I'm watching. Again, you can see for the last, maybe 5-6 trading days, we've been within this pattern. We've touched support maybe 4 clear distinct times, 5 times, very clear downtrend that is valid. Resistance line is in play. We could stay in this 4-hour equilibrium a bit longer, but when we break, if we break bullish, that's when we need to be looking at TVIX and UVXY and looking at some short-term upside in the volatility index as we look for a pullback in the S&P 500. Why I'm also scouting gold is the same reason. Gold is holding very extremely well with this market in euphoria mode. The fact that gold was a daily inside bar today and did not pull back is telling. The fact that we're not near our monthly consolidation low while the market is running is telling. So if we see consolidation in the market, I believe that the gold and silver bulls are positioned well to break short-term resistances and further increase the probability that our monthly higher lows have been established and that they are monthly bull flags. So if we see, what I'm looking for tomorrow is I'd love to see a little bit more red. Again, give me a gap up open on SPY so we can see a red start on NUGT, because NUGT is more convincingly in a tightening range. High, low, inability to break resistance, and now pulling back down towards support. I want to make an NUGT entry above 27.15. And again, this is where risk management comes into play, because if I just buy right here and then put my stop under 27.15, I'm risking a significant percentage. I'm risking a solid 8%. I never want to risk 8% on a trade. I want the price to get closer to my support level. Maybe I scale in. So my cost basis is a bit better than just trying to time a higher low with one entry. Either way, if we see some more weakness, I want hourly oversold conditions, which we will get if we break down under pretty much 29 or lower. We'll be looking for hourly RSI to get oversold. And we'll start looking for the daily higher low, playing off of 27.15 support. Best case scenario for everything that I'm looking at. Gap up open on SPY. If we see a bit more strength, that's not required, but that would just make it ideal for entries. Then we see SPY consolidation on the daily, a couple red days in a row. And then we see NUGT give us daily higher lows. Gold and silver break their short-term resistance. Gold 1520, still the most important level for me. I'm just rounding a little bit, but all these little tops need to break. And we need silver to get back over 1831 to continue its move. So market weakness, gold and silver break those resistances. Bull miners give us the daily higher low. Volatility index give us the 4-hour falling wedge bull break. If all those things play out, it'd be nice. So that's what I'm watching for. Oil. Big upper wick of profit taking today. Do we have the 4-hour uptrend intact? We do. Anything above 55.81 is a 4-hour higher low. It's been more and more apparent to me that oil is following the S&P 500 rather than the other way around. There are many times where the correlation is such that it is hard to determine, who's leading who here. But it's clear to me, at least in my opinion, that the market is leading oil right now. But we're looking for a 4-hour higher low to form. When we lose the 4-hour uptrend, we zoom out. We look for a daily higher low. Anything above 53.70 keeps the uptrend intact. And when we lose the daily uptrend, our weekly lower high for oil will be set. But no sign of that yet. Natural gas bulls keeping their raging bull move going. Bull flag on the daily. Big follow through. The volume has been standing out. And 2708 broke. Very healthy sideways consolidation, holding those gains today. 4-hour time frame. No consolidation just has me a little bit cautious. If you're in a position, you're comfortable. If you're not in a position, you're not looking for a bullish entry because we just moved 10% without 4-hour consolidation. So definitely would want to enter on consolidation if I am looking for an entry, but that's a weekly trend change. The inverse, little head and shoulders playing out. It's not my ideal inverse head and shoulders because the right neckline is above the left, but bulls will certainly take it. And the next clear level is 2894, and anything on the daily chart above 245 is a daily higher low. Bulls have a lot of space to work with in the uptrend. So that's what we're watching for this week. Keeping an eye on things. What's SPY doing after hours? Not a whole lot. So bull miners have our eye. Volatility index has our eye. Daily uptrend, higher lows on all the major markets have our eyes. And we'll see you tomorrow. Have a good night. Do good things. Thanks again.